Welcome to Trading Lounge and the US indices for Thursday, July the 29th. On the daily chart here for the S&P. So I'm actually looking at two counts here. So we've got from wave 2 here all the way up to wave 3 here. We're looking for 5 waves of 1 and 2 and 3 and 4 and 5. And in this last 4 to 5 waves here, we're looking for 5 waves in blue here of 1 and 2 and 3 and 4 and 5. And between 2 and 3 here, we're also looking for 5 waves of 1, 2, 3, 4, 5 here. And yeah, between green wave 2 and green wave 3, we're also looking for 5 waves. We have wave 1 to the upside. We're waiting for wave 2 to pull back a little bit, and then it'll be 3, 4, 5. So we're looking for 5 waves between 2 and 3 here. The other count that I have would have just simply would leave wave 3 top here on this one here. So we don't need to worry about it for a little while, but I'll just keep reiterating that and we'll take a look at that in due course. So yeah, that's where we are. Let's go in and take a look. So on the intraday, we could probably just go to here. Let's just scroll in and get a bit of understanding. So from wave 4 here, we're looking at wave 1 and 2, and because this one here overlapped this one here, we can't call this wave 3 here, so we need to look at this as wave 1 and 2, and 1, 2, 3, 4, 5 for 1 and 2, and then back here as 1 and 2 here, and then moving up for 3. So we haven't pulled back into the box yet. So Thursday is our bear day. So in our bullish weekly cycle, we'll see well, Wednesday and Thursday Tuesday starts to get a little bit choppy, and then Wednesday gets quite choppy with a V-shaped day. So Wednesday can be like this, trade lower for the day and then end up higher. Thursday can open higher and then trade lower for the day. And then it tightens up in Thursday afternoon, and Friday comes in and is bullish, and if Friday's bullish, well then Monday will follow through as well. We'll start to see profit taking on Tuesday, but that Thursday afternoon is a good time to buy. If you can line that up with your with Elliott Wave and also your trade setup, then that can be useful. So obviously at this stage here, we are looking at 4,400. So 400 is a nice whole number, and the market is sticking to that. We're looking at 5 waves up here, and in the European markets, we've only got 3 waves up so far. So in the European markets, we're looking at wave 4 here. But I suppose there's probably a case for having wave 3 here, but we'll just see how it plays out. So let's just see if Thursday drops first. We can go long above here. But the other thing too is the NASDAQ has already pulled back down to its 50% retracement level already. So I'll just stay with wave 1 being here. And if we move in further, just to pull this trend apart, let's just go to, I think it was a 15-minute chart. So this is how I've counted it up here as 1, 2, 3, 4, 5 for 1 and 2 here, and all the way up here for 3, 4, 5. You can snapshot that and check it out and rearrange it and so on and so on. So like I mentioned, we haven't pulled back down to our 50-60% retracement level. We don't have to pull down this far, or it could pull down right to the 61.8% exactly. It's a funny old world, that situation, but this trend here hasn't really been corrected. They can correct sideways and continue up. So I was looking at this being, well, you know, quite frankly, this here wave 2 can be right here for this. But there's a good case for looking at this as wave B on the S&P and the NASDAQ. So we can go long above, if you're not long already or whatever, you can go long above here. Otherwise, we'll look for 5 waves down into this space on the Thursday. And like I said, Thursday afternoon, if you can see this starting to, you know, move up a bit, then you want that first you're tracking that first impulse wave, the first 5 wave structure, and then you can move in across the top at that point. And once you're on your way here, just put the stop underneath, and then keep building all the way through, all the way right up into group 1 here. You want to be building positions. I mean, everybody's different, so it's a little bit tricky to say, but yeah, you can get 20 odd little positions in this space here, and that would be good, because let's just assume for a moment that the count that I got is correct. Well, we've got a series of wave 2s. We've got blue wave 2, green wave 2, and then this wave 2. This is why it may not pull all the way back, because if it is going to be a strong move here, then, or even just straight up from that point, if wave 2 is going to be shallow and sitting here, because the NASDAQ has already pulled back down to that point. So we just need to be aware. At this situation, we just need to buy new highs. But if you see it pulling down, that's what we'll be looking for, 5 waves. There can be a relationship between wave A and wave C here in terms of distance. So it may not come all this way down, but like I said, it could pull right down to the 61.8% and then move up from there. And if it just jumps up from here, well, then you need to be on there, and you need to build positions in above here. And you're basically looking for support on, well, 400, and then we've got 10, 20, and 30. So if we get support on top of 30, which is the top of group 1, a tested support there with the classic trading levels pattern, then you know that the market is being severed from the number 400 here, and we'll start to look at 450. I don't think the tick chart can give us much more, but also using the Actually, I was using the 10-tick chart yesterday, so I might just bring that across. I'll just have a look at this in case I need to update it anyway. But this will be 100 ticks. Let's just check it there. Not so much. The 10-tick can get us in a bit closer here. So this is the top as it stands, and from the top here we can see that, well, we've got wave 1 here. We do have an A and a B and a C wave here for this, and that C wave here has got 5 waves in it. You just have to, you could look at that and figure it out for yourself, but there's 5 waves in there. And then this is the one that interests me here, because if you're going for a new trade, then it would be above this one here, or you could go above this, just above here for that. It's possible that this is a B wave over here, sitting here. You could count it impulsive and you could count it corrective. You'd be sort of squashing both of them a little bit, but there is a good case for wave B here. We can go long here, but just be mindful that, you know, if it drops down, don't go buying it here thinking you're going to get a better price, because we'll be looking for wave C to move down further. And as I mentioned, with corrections, wave A here and wave C over here can have some equality to them, so we may only come down into group 2 and move off. If that's the case, then you need to be long over here when it comes back up above this level, because it'll be telling you that, you know, it shouldn't be coming back above that level, put it that way. So yeah, look, that's that. Let's just recap a little bit. So just on this 2-hour chart here, there's a good possibility being Thursday can be our bear day and have wave C moving down through here. At the same time, if this top gets taken out here, then move with that. In the bigger picture of things, we've got wave 4 here. We've got wave 2, which means that we're in wave 3 at the moment. So we know that wave 3 is normally quite strong and powerful. So we've got the third of the third coming into play. This is a section, if correct, then this should move quite swiftly through here. And our upside target here, by the way, for just based on this wave 1 here, is up here, 4,650. But in terms of short-term trading, the 500 here is the next level. So from, where's our 4,000 gone here? Let's just tidy this up a little bit. So we want our 4,000 here, which is a medium level. So we want to just emphasize that somewhat. Then we have group 1, which is 1, 2, and 3. So we don't need that. So that's minor level 1, minor level 2, minor level 3. So we're getting support on that, and that's really quite critical, because getting support on 3 sets the target up for 5. We don't need that in there for the time being. We can leave the 400 there for a bit, but the 500 is a bigger pitch here. But if this move here of 2, 2, and 2 here is correct, third of the third of the third, it probably won't spend much time at the 500 here. So really this is the time to start building in long positions from this wave 2. I can't sort of stress that enough. This is where you need to stay in the trend if you can, but don't overtrade, because you'll only cut your nose off despite your face. So less is more, but it's finding a balance on what you can accommodate, and what type of product you're trading, and so on and so on, as leverage, non-leverage, all that sort of stuff. So I'll leave that at that for the S&P. And this is just the Russell here. So as you know, we've been chatting about it. We've got a long position here. We've been triggered in here long as well. So anyway, I'm just putting the stop here. Hopefully this plays out nicely, plays fair with the other kids. So we'll put this wave 3 up there. As a target, we could look at that. So we can just grab this here roughly, and then move that to there. So this is where wave 3 should roughly come to, being up here somewhere. And we also need to look for 5 waves up there as well. So we can, I'm not sure where wave 1 is just yet, but we'll start to move these pieces into place. That's the Russell, so hopefully it's coming out of this sideways correction. I don't want to spend too much time on that, it's not important. The NASDAQ. So yeah, if I just go back to the S&P here for the daily chart, sorry to chop around. So when I said that this wave 3 here needs to sit over here for this, on top of this wave 3 as a secondary thing, that's basically lines up with the NASDAQ having 1, 2, 3, 4, 5 here and finishing here. So that's where that comes in. Which I think this is probably right, but still we'll just keep working both counts. And what we're seeing at the moment, it doesn't, even if I'm totally wrong with all of this, what I can say is that the market still has higher to go, because we've got this impulse wave here, and once we can confirm that this is a corrective move back here, then that sets the target for the next trend. So if we go step by step, we're not going to get into too much trouble. It's when we say that you create some positions that are going to the moon and they don't get there. Well, that's just bad management, isn't it? So for me, it's just monitoring it and keeping an eye on it. We know that we're going to spend time at 15,000, which is a medium level here. We're looking at some type of correction across this particular level. The market, would you say that the market has got support here yet on that level? No, not yet, but it's sticking to it, isn't it? It's still got more work to do here. In this case here, for this wave 1 and 2 here, you can see that it's already pulled down to its box, but it may just pull down again here. So we could just push this across to there, and there's a good chance that we can come down here and on the Thursday, and then as it comes down on the Thursday, it will tighten up, and then this is where you need to be looking to go long at that point, if that's the case. If I'm wrong here and we make new highs, well, then you just go that way. So in a way, it's really quite simple. I thought I'd be able to grab that, but it's a fiddly little job. Anyway, as we say in Australia, near enough is good enough. So it just gives us a bit of an idea. Let's move in a little bit further. What have I got on the hourly chart here? It's not very helpful. This is what I think that will happen at this point, but we want to go long above the top here or long above here. I think I'm going to have to go to maybe the 15-minute chart. So many charts, I forget which is which. That's okay, but it's still not going to help. So we'll have to go to the tick chart if I've got it here. We need to bring in some data. Okay, this is where I wanted to be. So I just wanted to have a look at this top here. So we were looking at this. It's a slightly different count, but it's the same count, but labeled slightly differently. So we're looking for wave 1 up there and wave 2 here for this. So this little move up here, you could probably count it a couple of different ways. We're going to use that. So we could look at this as the A wave, the B wave, and the C wave here. I just find it hard to get 5 waves out of this, that's all. Because here we've got 1 and 2 and 3, because there's 5 waves in that little move, and then 4 and 5. There is overlap here, I know that. The other way to label this corrective is this way here. Put it like that, with an A and a B and a C for the A wave and a B wave and a C wave. I suppose we could get 5 waves out of it. 1 and 2 and 3 and 4 and 5 with an overlap. Yeah, so it's a little bit iffy because of this one here is pulled down so much and overlapped this. It could be 5 waves up here with an A and a B, an A and a B and a C wave here, and then move up from that point. Or otherwise we'll need to look at this as wave 1 here with an A and a B and a C here, and then down for 3, 4 and 5 here, and then move up from that point. So I don't know which is correct, but in a way we just doesn't really matter, because we just need to act at a certain time. So as long as that stays in here, let me just check on that. I mean, this one, yeah, well, it doesn't need to be 5 waves. This is 3 waves, so that's okay. Let's just see how they go. Oh, there you go anyway. Look, if that top gets taken out, you know what to do. Otherwise, Thursday is going to bring us lower, and on Friday we'll pick it up. But sometimes I have to say that the move up here has already started late Thursday afternoon, you know, after lunch or something. So just be careful about that. That's what you need to do. You need to be able to count that. That's, well, we can look at this here. It may be wrong, it may be right, but that would be 1 and 2. So you don't have to do a lot of work. You just need to notice if that's come all the way down here, and then there'll be a rally for 4 and then down for 5 if that's going to be the case. And then this 800 is going to be really important here. So that's the number. And what you want to see is that when the market does come down here, you want to kind of figure out, you might need to go to 10 ticks or 2 minutes or something, but you just want to see that first little impulse wave there. That's your setup. That's your saving grace. And once you've got those 5, if you can recognize those 5 waves, then you can just move in on this side or over this side here for this. And then the stop, once that gets triggered here, then the stop will just go under here for that, you know. We'll just pop that in there for the time being. We may be able to use it later. And that moves up through here. So once that gets triggered, then you can move the stop. Well, the tricky thing is, if we've got a little bit of time, this is what you need to be careful of, because once you've got those first 5 waves, that's telling you that you're going to get another 5. Now, you may get the count wrong and it will give you the other 5, but then it can fold over from that point. So that's your initial risk from that point. So the second thing is that when this market moves up here, and if it goes into a little third wave here, That's cool, that's nice, it gets you away, but it doesn't get you out of trouble. But you don't want to put your stop too close, because you'll get wave 4, you'll probably survive that. But when wave 5 comes in here, if this pulls back 60% or 78.6% or something like that, it's going to take you out. And when a market, sometimes you get lucky like this is 1, 2, 3, 4 and 5 here, and we only got a short pullback here, but sometimes it can come deeper back down to where wave 1 and 2 is here, and because the market's been up here before and it's coming all the way, you'll end up getting stopped out here. So you got to kind of work at that, look at the bigger picture. So you think to yourself that, okay, we're looking at this going from say 15,000 to 16,000 or something of that nature, and then you say to yourself, well, you really want to be in the beginning of the trend, so how much can you handle? Could you handle one position under 15,000 and then once it gets support there, or could you handle two positions here? You know, because the other position here, if we took this away here, once we got the next set of 5 waves in, we could use that over here for that. So you got 1, 2, 3, 4, 5. So when that gets taken out, or you could put it on top of your B wave at that time too. So if this was going to be an ABC coming down here, which it will be, so you'd be able to refine it further, pulling back to the 61.8%. So all I'm saying here is you don't keep your stop out of the way until you got the next 5 wave structure here, okay? And then this, and don't overdo it. So you've got 2 trades in below here, and if this one here is moved off, well, then you can move your stop here and bring it over to here, and then get that one to break even, and then this one is here. So you keep building like that. You get the next one to break even. Just keep covering your costs, and you'll just end up with quite a few contracts in there. It's just a bit of a skill, but it's worth sort of focusing on. And once you get this level up here as a classic trading levels pattern, then you can go along from that point too. So this will be the same thing. It'll be a bit like this here. So we've got the arrival, the reaction, the first high above the level. So you go long above there. If you're lucky enough, you get a second high here. In this case, we're looking at it to go down, but like I say, it could just come down to here and move up again and catch us out. So we're covering that situation. But this is a classic trading levels pattern here. So each market is, well, all the markets are the same, aren't they? They're the same, like us human beings are all the same, but at the same time, we're all uniquely different, and each market is uniquely different as well. And you need to kind of tune into that, that DNA of it, fingerprint, footprint, whatever. Yeah, so another classic trading levels pattern sort of over here to build in onto your next trade. And once this gets triggered over here, then if that gets triggered here, then you know that the 15 is safe at that point. So then you can bring this over to here, just depending on the next set of 5 waves though. So this would be wave 1 here, 2 here. All of this might just be wave 3 to here. All right, so this might be just wave 3 to here. Let's just, leave it like that. So then this will be wave 5 coming up here, for instance, and then it can come back and test where you've been before, as wave 1 and 2 here. So it takes quite a lot to get through to the other side. That's what I'm saying. So if you take a look at the bigger picture, get 1 or 2. My thing is always get 1 or 2 trades below the level and then start building above the level, and you should be able to get 4 trades in the time you get to 15,300 up here, which is all of this is these levels here are minor levels. 1, 2 and 3 make up group 1, because once you get to the top of group 1 here, once you get tested support here, then a classic trading levels pattern here on 300 it tells you that you're leaving the 15,000 at that point. That's this 300 severs. That's the line in the sand that severs the market from being pulled to the 15,000. And what people do naturally, their orders start to look at the 500. 5 being the second strongest number, so it'll be pulled to this. So this here is tested support. This number 3, I'll just keep it really simple. That's telling you that you're on your way, that you're leaving this number and you're going to that number. Anyway, enough waffling on that. We need to look at some stocks. I won't spend much time on stocks. They're traveling okay. There's earnings going on. With Tesla here, we're still looking for a move to the upside. It is giving us a little bit of a hard time in here with all of this. There is the possibility that it can pull back down lower into this area here. There's different ways you can count this as well, but the trick here is to understand that this move here is corrective, so we should be seeing further upside, but it can dip down to 600 or close to that first before going up. So we're just waiting. It's not letting go of that 650, which is a medium level. Medium level is always halfway between two major levels. So it's still there. It will break out at some point. And Facebook here, let's just check on that. So, well, it's interesting to see it drop out of group 2 here. It was having some trouble at group 2. So between 300 and 400, we've got the levels there, and the levels are 10, 1, 2, and 3, as I call them. So that's 3. That makes up group 1. And you can see how it's got nice support on group 1 here. And that's important because it gets you to the next level, the 5. And markets move pretty quickly between, well, quite slowly between 1, 2, and 3 in both directions. I can be proven wrong, and it can just cut through like butter, but just generally speaking, moving up and down through 1, 2, and 3 takes a little bit of time. Markets moving between 3 and 5 are quite quick in both directions, and also 5 and 8 in both directions, but I normally use 72 here. So if I was trading up here, I wouldn't trade to the 80, I'd trade to 72. So this little move in here, I'm not going to go to the intraday, but it'll be basically the same as the other guys, and it'll be a 1 and 2. So you can look from the low here to the high here and look back for the 50-60% retracement level. Once that's done, then we'll see further upside into the 400, which is a medium level at that point. And next one is Square, and it's just on the daily chart, no need to change it. So as you know, we've got wave 3 over here. The move down here is the A wave. We know that this is in, the first leg is in 5 waves, and then the correction, and then another 5 waves here. So we know that this is 3 waves here. So that means that we know that this move is bullish corrective. We know at some point this top will be taken out, and we've known that since over here, and we've been mucking around with this market for this trend here for a little while. Our aim here was to get a position, well, from 200 to 300. They're the major levels. The medium levels in the middle. Group 2 is in here. And the idea was to get a position under the level and a position over the level. And then we watched this trend move up through here, and we could see that the ranges were getting smaller and smaller and smaller until we got a turning bar. It hit group 2. We're expecting it to pull back. It's pulled back. And now we'll see this market start to, well, it may vibrate here for a bit longer, but once that's done, it will be pushing up higher at that point. So that's not a problem. And we're looking at Apple here. So well, we're here with, yeah, well, it's not a big deal here. We're just in this wave 4 here. So there's probably more downside in the next session. So this is for 150. So this is a medium level, halfway between 2 major levels, 100 and 200. And then the minor levels here, 1, 2, and 3. And then we've got group 2 above that, which I haven't got in here. And this is the classic trading levels pattern. So we could look at it like this. So we've had the arrival at the 150, and we're looking at a wave 4 here, which is typical of being at a level because it's normally wave 3 here, with wave 4 and wave 5, and we're in an A wave, a B wave, and a C wave. And this C wave here will have 5 waves in it, and currently we're in about wave 4 here with this. So we still need to go through all of this with this. So we're going to be here a long time, as I mentioned before. So an A wave, a B wave, and a C wave down here. I'd imagine we're in this C wave, we're probably in, that's probably a wave 4 rally or something. This is the 38.2% retracement level that it can come to here. So the 140 area before pushing up here. Like I said, this market is has had its trend. and you always get the opposite of what you're looking at with the market. It's not like the real world. So we see trend. So the next is going to be correction. 150 is it's a sticky number. So we're going to see this travel. We're going to be here for a while. So I'm not going to go much onto all of this. The next market we're looking at is Alphabet, which is slightly different from Google in terms of pricing. Maybe I should do Google, I don't know. Where are we here? I'll just clean that up, we don't need that. Okay, so I think I need to do a little bit of work. I'll have to go do some work here for this. The good news is that we've entered group 2 here, so 65, 72 and 80 in here. We haven't finished this trend yet. We'll be up here somewhere with this, so we want this major trading level as our target. And it shouldn't be a problem, because most times once you get to the medium level and you got support on the medium level, normally it's a pretty smooth ride up to here. If it's going to fail, it's going to fail at the number 8. But this trend has still got further to go here. What I need to work out here, sorry for my waffling and scurrying along, but I've got to check out this trend. I mean, we're already on a tick chart here, 100 ticks, but I'll need to go into 10 ticks to sort that out. So that's something that I need to do. But yeah, expected correction here. But we've still got further upside. I've got to see if there's 5 waves from here to here, or just 1 and 2 and 3 and 4 here for that. I'll do that in my own time. And the big Amazon. So let me clean this up, because everything gets, when I close my platform, everything gets squashed back up to the last price. So I've got to figure out a few things. Obviously, we talked about being long above here. That's cool. We're looking for wave 2 to come back. It's possible that this wave 2 can come over here as an A wave, a B wave, and a C wave here. So that's there. We can bring this down here to this here, a little bit low, but just be prepared that we may need to hold it further down here for that, if that's going to be the case. I think that, yeah. Let me think about this for a second. Let's just go to 100 ticks. Let's go to 10 ticks and pick it up from 3,500, 3,500. It looks like 5 waves. So that also looks like 5 waves. That also looks corrective there, doesn't it? Doesn't look like it's that doesn't look like it's impulsive at that point. So let's clean these up. What's that distance here for that? That's at 50-60%. So we can use that. That's cool. Okay, so that's what we're going to do. It doesn't matter if we're wrong or right. The market's the boss. We'll just make sure that we turn up to work on time, clock in, so to speak. I'm just going to go back to my 100 ticks. So yeah, that's okay to put there, because that's, if that is 5 waves here, let's just say that we come down here, right? That would be wave 1 and 2 here, and 3, 4, 5, or we could have an A wave, a B wave, and a C wave that just comes down here a little bit further and then moves up from that point. But either way, all we need to do today is clock in just on top of, we need to bring that down from here to here, and that's all we need to do today on this. Let's just see how this plays out. I don't know if this is going to be wave 2 sitting here, or we're going to come down to wave 2 here. That's what I don't know. I need to do some more work on that, but I can also say it doesn't matter at this time anyway. All we want to do is, we know that we've got wave 2 here with wave 2 here, and we're going to be going up for a wave 3, and we need to be on it. That's all. So that is that. So thank you for putting up with me, and I'll check you tomorrow. Cheers.